What's up, everybody? It's Connor Tuck. We're back for another interview with one of my wonderful affiliate partners here in the world of real estate. So we're going to jump in. I'm going to let him introduce himself in a second. But today we're talking all about homeowners insurance. As you go through and you buy your home, obviously you should probably get insurance on it. It's a big purchase. So what I'm going to go through today, about 10 questions with my insurance partner, is just running down what are the basic questions you should be asking, what are some things you should be aware of, and just some other little, what do I not know that I should know type things. So anyway, without much further ado, Eric, why don't you go ahead and introduce yourself?
Yeah. Thanks for having me on, Connor. Happy to do this. Connor's awesome. For anybody that's watching this, go through him for all your real estate needs. My name is Eric Battisti. I am with Premier Home and Auto Insurance. We are the in-house insurance brokerage for a couple different Keller Williams offices. Been in the game for about 5 years at this point, licensed in New Jersey, Pennsylvania, the Carolinas, the DMV area. So I have vast knowledge of a lot of different market areas. And I think that really plays a part into, why a lot of people would say that myself and my brokerage are so good at what we do.
Yeah. So I'm going to hit a spade here. Me and you are dressed a little bit differently than our normal repertoire. Now, I hopped on just saying I was dressed all professionally, and then I come on and you are in full Steelers gear, and I couldn't let that fly. So we both have playoff games tonight. We are filming this on Monday, the Super Wild Card weekend, where we got the Steelers playing the Bills, right? Steelers playing the Bills, and we got the Eagles taking on the Tampa Bay Bucks. So go Pennsylvania sports. Let's hope we both do great today. We'll see you in the Super Bowl. But anyway, let me jump into my first question for today. We're speaking a lot of this as a buyer, right? But as a buyer, you become a homeowner, seller, buyer, doesn't really matter at that point. We're talking about as you're going to purchase, or if you currently own your home, some of this might apply. But let me ask the one big question. Is it required, right? If I am purchasing a home, is homeowner insurance required?
Sure. This is a loaded question, right? And here's why. If you're working with a mortgage company and you are going to have a mortgage on the property, it is 1,000,000,000% going to be required, right? There's no way that you are going to be able to close on the home without having a policy in place. And even after closing, let's say, for example, the policy cancels for X, Y, Z reason, your mortgage company will find out about it, and then they will look to force place you a policy with some carrier you've probably never heard of for quadruple the price that you paid initially. So yes, it is definitely going to be required if you're working with a mortgage company, even if it's a cash purchase or some type of investment property, whatever the case may be. Even if you're not working with a lender, it should always be recommended, and you should still have it because obviously you're paying a lot of money for something, and why would you not want to protect that, right? God forbid something happens to that home and you purchase it cash, you have no coverage for it. You got to do it all again.
So in a kind of basic buckets, we got two buckets. When you buy with a mortgage, you have to, because technically the bank is owed a lot of money from that home should something happen, right? And a lot of times, let's say if there was an act of God or something that happened, and we'll get into some of this, the qualifying reasons, but if that house burns down or if there's some something happens, it's not just your money that needs to be compensated back, it's the lender's money. And most of it, I mean, when you're putting 5% down conventional mortgage, most of the money tied up in this house right now is the lender's money. So of course insurance is going to be recommended or not recommended, required. But when you do buy a home cash, you do technically have a choice, right? And it's probably a pretty dumb choice not to get homeowners insurance on it. But I'm sure there, out of 1,000 people that own a property cash, I'm sure there are a couple people that wouldn't have homeowners insurance on it. So that makes perfect sense. Now let's go one step deeper into it. So as we start getting into okay, I'm buying with a mortgage, so I'm going to need homeowners insurance. Let's just start right there. Should I, as a buyer, just go and find an insurance company online? Should I just use the same person that's using for my car insurance, or is there a better way to go about finding homeowners insurance?
Yeah. Obviously the standard procedure that a lot of people do is they call up whoever they're with for their auto coverage. And obviously that makes it a little bit easier, right? You already have some type of quote unquote outstanding, relationship with somebody that writes insurance, right? And you'll obviously get some kind of discount for having your home and your auto together. The two problems with this, right? The first one is you don't even know in terms of a market, kind of like where that company's at in the market, right? Um, so you could, as an example, let's say you have Geico for your auto insurance, right? First of all, a lot of people with Geico don't even know that they don't have their own homeowners insurance product. They broker it out themselves to two other companies, right? So that's the first thing, is you don't really know where your company even stands in the market, right? And to kind of go a little bit deeper into that, you don't know how their products are changing right now with where we're at in the insurance market. You don't know where they're at price-wise compared to a lot of other companies. And you also don't really even know if they're going to set you up for success, right? That's the biggest thing that a lot of insurance agents kind of miss out on, is when you're working with a buyer who's, let's say, going under contract on their first home, right? If you're not discussing the important things about why you need this, what it's going to cover, right? Why they need to just go in and do their research about homeowners insurance, you're setting them up for failure, right? That's kind of the first thing on that, right? And then the other thing too is there's two different kinds of insurance agents, right? There's brokers like myself, where we have the option to write through a plethora of different companies. And then there's captive agents who only have the ability to write through one company, right? So you could go online, you could find an agent that works with State Farm, and guess what? They're only getting you a quote with State Farm. They're not shopping the entire market and kind of comparing coverages, comparing prices like I am, right? With me, I work with 17, 18, 19 different carriers at this point, right? So I'm going through all of these carriers. I'm finding, okay, this company's offering this coverage, that coverage, compared to another company who's only offering this much coverage, who isn't giving you, an additional coverage that another carrier might be already giving you. And then I'm also just looking at the price, right? So I always say, if I'm working with a buyer who says, I called my auto carrier, right? I got a quote with them. I think I'm going to go with them. I always just say, that's totally fine. Whatever makes you comfortable. But I recommend that you send me whatever quote they gave you, right? And I can review it for you. I'll let you know if this is going to be in your best interest or not in your best interest. And then obviously, if I don't find it's in your best interest, just give me a couple pieces of information. I'll run the numbers and I'll show you what it should look like to have a policy in place that's going to protect you, right? Because that's all this is obviously when you're buying a house, you want to make sure that you're protected for everything, right? Not just the bare minimum.
And this feels very similar to when we talk to buyers about looking for mortgage companies. Look, you can go to the company you bank with your entire life, right? And you can ask them to pre-approve you, and they will. And you're living in a silo. You have no idea if that's good, bad, good rates, bad program, everything. And it's the same with insurance. Yeah, you could go to one company, a Geico, for just throwing their name out there. And again, they're happy to write you a quote, and they're happy to bundle it and all that stuff. And you may look and be like, wow, only $1,700 for the year. That's great. And then Eric goes and runs, across the multiple 17, 1,800 companies. And he's like, hey, I can get you better coverage at $1,200 a year. And you're sitting here saying, oh, well, why didn't Geico give me that? These companies are built differently. These are different companies that have different things, and stuff changes all the time. Internal to companies, external in the market of regulation. And we had a conversation not that long ago where a lot of insurance in the state of New Jersey has increased. I think we were talking flood insurance, but I wouldn't be surprised if it's across all of them. And you have no idea if this company just did their big quarterly review to double all their premiums, and another company hasn't had that meeting yet, and you could still get it cheap for the same coverage. So a lot's involved there. So, all right, we've kind of spent a lot of time here on just like, is it required and what's the basic setup of getting it? Let's start getting into some nitty gritties of insurance itself. So when you have sort of we'll call it a traditional policy. You may have a better term for it in the industry, but a traditional policy, give me like a bare bones elevator pitch sitting at the end of the bar. What does that policy cover? Just as easily as you can lay it out for me.
Sure. Your standard homeowners policy, right? It's going to cover the home itself if anything were to happen, burns to the ground completely, a wind, hailstorm rolls through, tornado, hurricane, right? All of that stuff's going to be covered on the home, right? So obviously you have the structure of the home, rebuilding the framing, getting the roof redone, making sure your kitchen, your bathrooms are all back to where they were before the time of the loss, right? That's obviously first and foremost is just the house itself is covered. You're going to get coverage on all of your personal belongings, your electronics, your clothing, your furniture, right? All of that's going to be covered. There's going to be liability coverage for you. And I know we're going to get into that a little bit later on too. There's coverage if there is a claim that you have to file and you can't be living at the house, right? You're going to have coverage for that through your homeowner's insurance. And I mean, at a base level, that's basically it, right? Anything else is going to be an additional coverage or an endorsement. And again, we'll get into that a little bit further on. But yeah, just your base coverage is the house itself, and all those, liability, additional living expenses, right? Those are just bare minimum.
The house, the stuff, and the people.
Correct.
Right?
Yep.
As three kind of neat buckets. All right. So as I was prepping for this, as I have done with all these, there are some terms that come up that even myself, I'm a little unaware of. One of the words that kept coming up with was, what are perils?
Mm-hmm.
Is peril an actual defined thing? Is that something that maybe just is out on the internet, but you guys don't talk about it in that way? But talk me through that. Is that something that I should be looking for in my policy, or is it going to be spelled out? Just how does that find itself inside of a policy?
Yeah. So a peril is just a fancy word for an event or a circumstance that results in you needing to file a claim, right? So when we talk about perils, we're talking about a wind, hailstorm, a tornado, a hurricane, fire, water damage, right? Those are all perils. So it's just a fancy word for essentially what's creating the loss.
Okay. You said a word in here, and it's probably one of the most asked questions that I've gotten. And it's actually a question I think I may have gotten wrong back in the day. When I was talking about this, I think I may have gotten this wrong, but talk me through this. Let's talk water damage for a second. Because I think the obvious one is flooding, right? There is a flood, right? Sandy down the shore. A lot of homeowners insurance payouts happen because there was a flood, sort of an act of God flood that caused property damage, belonging damage, and potentially even human life damage. But that's not the most common water damage that a homeowner has, right? The most common water damage a homeowner has is, hey, my 6-year-old clogged the sink upstairs and left the water running for 3 hours. And I have water dripping down all the walls in my house. It's ruined the floors upstairs, and it's ruined 2 sheetrock walls up, in the first floor. And now there's water damage here. And it's going to cost me about $10,000 to have to fix this. And I know there's so many little loopholes of this, but let's try and as much as we can just stay down the middle. Is something like that covered under water damage from it might not be a peril necessarily, but is that covered?
Yes. Right. So in your basic sense, if you have a pipe that bursts in the house anywhere, if you have, if somebody leaves a sink running or the bath running and that floods into the home, under a basic homeowner's policy, there will be coverage for that. Right. That's a lot. That's always a question that we get too, is is this a specific endorsement? Is this flood damage? What is that? Right. And that you're always going to have coverage on a basic homeowner's policy. If your pipes burst, if somebody leaves a sink running and it floods, it's always going to be covered. Right. And you mentioned it, there are some little tiny tweaks in there and some nuances and some loopholes. But yeah, in your basic sense, those kinds of things are going to be covered regardless. Now, I will say that when we talk about those losses, right, it's the key words are always sudden and unexpected, right? So if it happens and you have no idea that it's going to happen, I mean, coverage 100%. If it's one of those things where it's, during the inspection, we saw that there might be a problem down the line and we didn't take care of it. Now we're talking, the insurance company is going to send their adjuster out. They're going to do their research and they're going to say, well, you could have known this was happening when they did the inspection. You didn't take care of that. Technically, it's negligence on your end. This isn't something that we're going to cover, right? So sudden and unexpected are always the key words when we talk about those kinds of things.
That is a finite, helpful way of describing that. Because you're right. If you have a leak in that upstairs sink that's been corroded now for years, and you knew that one of the bulbs was on the verge of going, and then you have 10,000 of property damage, you knew about that. Like, or in a very reasonable sense, you should have known about it, and you probably did know about it. And yeah, it did happen suddenly, but it wasn't unexpected. This was going to be a natural result of negligence, of you not maintaining your property. But if everything was solid, everything was good, and it was a fluke accident that happened out of the blue, that's sort of where we start to draw the line from the insurance adjuster about what will and what won't be taken. All right, so that sounds good. All right, so I want to kind of jump gears a little bit. How do deductibles get calculated? Is this just like a standard calculator? Do you guys make it up? Do I make it up as the homeowner? Like, and I'm sure with different policies, there's different coverages versus different deductible amounts. So can you just walk me through, like, again, a basic sense of like, how do I approach deductible? How do I prep myself for knowing how much those could be? Maybe even saving for a rainy day fund. Like, just walk me through the deductible conversation a little bit.
Sure. Deductibles aren't, what's the word? Like, they're not something that the carriers themselves come up with. Right. It's not like a replacement cost estimator, like to figure out how much the house needs to be covered for. Right. When we go through the process of quoting, there are just different deductible levels. Right. Usually the bottom, the most, I should say the lowest deductible for every carrier is $1,000, and then it's $2,500, and then it's $5,000, and then it's $7,500, then it's $10,000, so on and so forth. Right. So it's not like the carriers just use a magic button and come up with a deductible. It's always the agent that gets to set whatever deductible that they want. Now, I will say that the way that some agents will get buyers to have a higher deductible and kind of slip it through is they'll do a percentage deductible, right? So if you ever see on your policy that there's a 2% deductible for wind hail damage, okay, that's different because now you have to do the percentage of whatever your dwelling coverage is, right? So whatever the coverage is on your home, you have to do that number by 2%. And then that's what the actual payout of pocket for the homeowner is going to be. But in a common sense, I mean, if I wanted to go in there and adjust the deductible, all I do is click the drop down and pick a different level, right? Now, for those who may not know what a deductible is, right, the deductible is what you have to pay out of pocket as the policy holder before the insurance company takes over and covers the rest of whatever the claim may be, right? In a common sense, $1,000 is usually what a lot of agents put. I will say nowadays, we're seeing that getting raised a little bit to $2,500 as the minimum because we want to shy homeowners away from using insurance for claims that might not be necessary. So again, it's not something that's calculated unless it's that percentage deductible, but it's just something that the agent can go in and set for buyers.
So, all right. So that kind of opens up a little can of worms here then. So as a buyer, right, obviously my preference would be to have the lowest deductible possible. Right? Just as a, hey, if something happens, I want to spend the least amount of money of my money onto this, and I'd like to have more of the insurance. Is there a relationship, an inverse relationship between, like, okay, maybe as a buyer, I have a choice, right? And as an agent, you could say, all right, here's a choice. You can either do a $2,500 deductible, but you'll have, and you'll only have these services. But if you go to a $10,000 deductible, you'll have these extra services. Is it like that? Like, if I go higher with my deductible, do I get something more out of the insurance itself? Or is that not really related as much?
Yeah, that's not really related, right? The only thing that really happens when you raise or lower deductibles is you save money on the overall premium of the policy. So the higher the deductible, so let's say you have a $10,000 deductible compared to a $1,000 deductible, the price difference on the same policy with the same carrier might be a $500 a year difference, right? Because the higher your deductible is, the less risk that the insurance company is technically taking on, because you're going to have to help them more, or I should say, you're going to have to pay more out of pocket before they take over in the claims process. And, technically they're paying out less than they would if somebody just had $1,000 or even lower, a $500 deductible. So it just adjusts the pricing of the policy premium. It doesn't give you any more or any less advantages within the policy itself.
Okay, got it. So the coverage isn't changing, but how much it's going to cost me on a yearly basis will change. And I guess that's there's a lot of mortgage metaphors as we talk about insurance too. And the way that this is kind of presenting to me is like, okay, I can choose to put more money down and I'll have a lower monthly payment. And if I put less money down, I'm going to have a higher monthly payment. And it's the same thing. For that, it's a loan to value thing. But for this, it's a risk thing. It's the insurance company saying, look, like pay us $1,000 a year and we'll give you a $5,000 deductible. But if you're willing to put $10,000 down as your deductible, or to do a $10,000 deductible, we'll give you that policy for $800 or $700 or $600, right? They'll give you a low. So this starts to come to a question. And I would imagine as we start taking this content and then advising based off of it, I would say to the buyer, take a look. Are you somebody who has a ton of savings and low income? Or are you the opposite? Do you have really good, solid monthly income, but you don't have a ton of savings, right? That if you don't have a ton of savings, I'm not going to put a $10,000 deductible because I may not have $10,000 in my bank account. But if I have, $500,000 sitting in the bank account, but I'm only making $36,000 a year, maybe I had a trust fund, but not a great job. I may say, you know what? I can maybe cover that bigger deductible, but I can't handle the monthly payment being too high. So I think that's probably where you start to look at it is. So that's a good idea. So coverage stays the same, but it's like more money deductible. I can get you lower monthly premium, lower deductible, higher premium. That's sort of the relationship. Okay, got it. All right, so let's go into this a little bit more. You mentioned that we had like the house, the stuff, and the people. But what about somebody who has like a really luxury item in their house? I'm thinking of, people who have like big comic book collections that are worth maybe potentially a couple $100,000, in the home, Rolex collections, you name it, whatever. So obviously, a standard policy, a traditional policy isn't going to cover every single thing to the hilt. So when are some, or at least just talk about, what are some of the things and activities that would have you start to say, hey, we may want to start to look at supplemental coverage, or we may want to start to have this other coverage. Like where do you have to get to that? And maybe we keep it in the vein of like expensive items in the home.
Sure. It's kind of a weird conversation, right? Because there's kind of two ways that we can approach it as an agent, right? A lot of companies offer two different ways that you can get coverage. So just as an example, let's say somebody wants to cover an engagement ring on the homeowner's policy. Okay. It breaks down to two things. Okay. How valuable is it? And is it going to be stored in a vault or is it not? Okay. Those are the two questions that we always have to ask, right? For how much it's worth. Okay. It's a subgenres, right? So we're going down a rabbit hole here. You can either schedule it, which means that that you have to use the appraised value and you cover it at that appraised value. But the problem when you schedule things is that essentially means that it's like in a vault somewhere, or it's not leaving the house essentially, right? Or we can do blanket coverage, which means, hey, I have an engagement ring and some other valuable pieces of jewelry that I have a total of 20,000. Okay, cool. We don't need to essentially cover those things individually for how much they're worth, but we can put a blanket 20,000 in coverage on additional jewelry that, yeah, okay, it might leave the house. It might be worn all the time. It's not something that's locked up, or people won't really have the ability to take from us or lose, I should say, because it doesn't leave the property, right? So it all depends, right? If you have like a fine piece of art, yeah, that's 100% going to be something that I need a colored appraisal for, that we're going to have to send into underwriting, and they're going to have to cover it at the exact value. If it's an engagement ring that, you spent $7,000, $8,000 on, okay, we don't necessarily have to schedule it. We don't need the appraisal. We can just put it on the policy as a blanket coverage. It's for an engagement ring and it's worth $10,000. So you're getting a little bit more coverage than what it's actually worth, but that's kind of the conversation. It's okay. What are we covering? How much is it worth? And is it something that is going to be easily stealable or losable by you or another individual, right? And again, like a base policy is going to have some coverage for these things. We're talking maybe 1,500, 2,500 in coverage, maybe. But yeah, it all depends on what it is, how much it's worth, and obviously what's the likelihood of it getting stolen or lost.
All right, so that makes sense, and that kind of gives me and you kind of said a price there, because I'm starting to think, I'm like, obviously the spectrum of all the things we own, the lint at the bottom of the bottle, pockets, all the way up to my vintage Ferrari, everything costs something in there, and it's not like, okay, we're just going to draw a line here and say everything above that gets supplemental and everything below that can be covered by the traditional. But would you say, if people, again, ballpark, just as we're thinking about this, obviously speaking with somebody, it's going to be different, but like that $1,500 to $2,500, if you have an item that's worth more than $1,500 to $2,500 by itself, would that start to become a candidate for something that we may want to include into a separate blanket policy to cover some of the more expensive items?
Yeah, if it's something that you want to include in your homeowner's policy, right? There's obviously other kinds of coverage, right? You could get it through the jeweler, whoever did the appraisal might have some type of coverage, right? But if it's something that you want to add to your homeowner's policy, yeah, that's obviously when we start the conversation is, oh, I have a ring that I want to cover. Oh, okay, how much is it worth, right? How much did you pay for? What's the value right now? And if it's above that threshold on a base limit policy, yeah, it's something that we're going to have to look at adding, whether it's through blanket value or actually scheduling it for the appraised value.
So let's just do like a quick rapid fire here. What are some of so we've did one for sort of expensive items. What are some of the most common supplemental insurances that happen beyond just the traditional policy?
Yeah, I would say it's wedding bands, engagement rings. I would say it's watches, and fine art. Every now and then you get like, oh, I have a computer that I use for work that I spent $6,000 on. Okay, we'll add that coverage, right? But the big three, it's jewelry, art, and sometimes instruments, right? I would say that there's really only two that a lot of people want to get covered. It's jewelry and art are the two big ones. But I mean, really, if you have any valuable items outside of that, you can obviously look at it to your policy. It just depends on what the process is going to look like.
All right, so here's kind of two random ones. One I'm going to ask as just like a quick off, and then the other one I actually want to bring us into a different conversation. How about pets? And I don't mean pets in the sense of like a replacement value for a pet. That's not quite what I'm looking for. But I've heard through some grapevines and through some client situations that like, hey, I got a certain breed of dog, my homeowner's insurance has increased. So is that true, right? I'm sure there are certain breeds that are on a recognized, more aggressive dog breed stance that if you are known to have one of these, that it should cause a change to your homeowner's insurance policy. I would imagine specifically in the liability section, right? Because it is potentially a slightly more risky situation. If you have people come to your home and that dog bites somebody or something happens on your property as a result of that animal, that could cause an issue, right? So is that true, right? There are some breeds, right, in that?
Yeah, there are carriers in the state of New Jersey that will write a homeowner's policy for individuals or families that have a dog that other companies might say is on a restricted breed list, right? When we talk about the restricted breed list, we're talking pit bulls, Rottweilers, some like Stafford Terriers, right? Any dog that in the past 20, 30 years has just been deemed an aggressive breed, quote unquote. A lot of carriers in the state of New Jersey right now have that list and are not going to offer coverage regardless. It's just going to be declined for all homeowners coverage. Hey, you have a dog that's on the restricted breed list. We're not going to offer you coverage. Now, for the carriers that do, right, you're going to look at an elevated premium outside of, other carriers. If you didn't have that, right? If you didn't have one of those dogs, you'd obviously probably find a lower premium because you can shop through other carriers. And yeah, a lot of those companies that do offer coverage for those breeds, they will not allow you to write more than 100,000 in liability coverage because the likelihood of the dog biting somebody increases compared to if you have a Chihuahua, right? So yeah, it definitely is tough right now to find a carrier that'll write a home that has a dog that's on that breed list. You're going to look at a higher premium, less liability coverage. They might even ask you to have a higher deductible because, again, the likelihood goes up that something could happen. Now, I know that over the last year or two, there's been a lot of murmurs in the insurance industry that the state of New Jersey is looking to get rid of that list. But as of right now, in the start of 2024, we haven't heard anything about that, right? It's still in place with a lot of carriers. And, in the foreseeable future, it doesn't look like that's going to change.
Okay. All right. That's reasonable. So there is something about it, but may change in the future. Okay. Talk to your insurance provider. I think with a lot of this stuff, this is supposed to be general content for education, but as you start to talk about your scenario, obviously talk to me, talk to Eric, talk to your insurance carrier and all that. The other thing I wanted to ask you, and then we're going to kind of rip into just the last little bits of like, how do I file a claim? What happens? So let's talk flood insurance for a second, man. We've talked, and flood insurance is on the rise, pun intended, I guess. We had a lot of rain recently, just past couple of weeks, right? We had some pretty big rain, and there's still some areas. I live down in Runnymede, and I'm trying to drive through Deptford this past weekend, and there's still road closures from floods. So we are in an area, we're a coastal state. We deal with this. We have a big tidal Delaware River and tidal tributaries, Rancocas, and some of these other rivers that we live around, right? So, I guess the question that I'm kind of asking, but I know the answer to is, does every property in New Jersey require flood insurance? No. Which properties do, right? We can generally go on public records or the EPA website, and you can generally find the flood map. And that part's pretty easy, right? Like going in, typing your address into a floodplain map and seeing where I am. But then you start getting into like 500-year floodplain, 100-year floodplain, inundated levees, different things like this, and then it requires. So coming back to the very first question we asked, is flood insurance required? If you have a mortgage and you're in a flood zone, yes. If you buy cash, you can do whatever the heck you want. It's up to you, right? I just sold a property that was on the river. The gentleman owned it for 20 years cash. He's like, Connor, I bought this thing for $36,000. I probably could have gotten flood insurance. I'm totally in a flood zone. And I just never did it because I never had to do it. And anytime I did have a little water in the basement, I just addressed it myself as an investor owner. Look, that's a very small percentage. But for the most of us who are going to be buying in Riverton, Palmyra, right? Some of these areas that are going to be right off that water main, we got to know about it. So talk to me about, so I'm buying with a mortgage. I found out that I'm going to be in a floodplain. So how does I have to obviously still get my traditional policy, but now I have to get a flood policy as well. So kind of talk me through just a little bit of that conversation you have with a homeowner in that scenario.
Sure. And I mean, it's not even a hard conversation, right? It's literally like, hey, you're in a flood zone. We looked it up on the FEMA website, right? You're clearly in an area where flooding is possible. Your lender's requiring that we get a flood insurance policy in place, right? I can run the numbers for you pretty easily. The two things to keep in mind, right, is if you're an FHA buyer, it used to be required that you went through FEMA, which right now isn't really the case. There was a piece of legislation that went through, I believe, in October 2 years ago, stating that FHA buyers were no longer required to go through FEMA. But on the flip side of that, it breaks down to the lenders themselves and what their underwriting department requires. If they still need a FEMA policy, you have to go through FEMA. We can't really get around that. If they say, hey, we just need a flood policy, it doesn't matter if it's FEMA or private, we can go both ways. And somebody might ask, well, what's the difference between FEMA and a private carrier? Okay. FEMA is backed by the federal government, right? Private is just a private institution that offers flood insurance coverage, and it's usually at a cheaper premium, right? So FEMA is usually expensive. Private is usually less expensive, okay? The problem that we have right now in New Jersey is that because of the last couple of years, we had Ida roll through, right? We've had Sandy in the last 12 years that came through. We've just seen a lot of elevated rain events that have caused overall flooding through these floodplains. Now, the thing to keep in mind with flood insurance is that rainwater is not covered. It is just strictly If there is an event that causes a creek, a river, anything, a moving body of water that has the ability to flood because of one of these events, that's when flood insurance kicks in. If there's a lot of rain happening and the ground's soaked and there's water seepage, that is not going to be covered by a flood insurance policy, right? That's always a conversation that we have, because the first question is, oh, okay, so, I have flood insurance. If it rains a lot and I get water on my basement, that's covered. It's not, right? There's a caveat to that, and there is a loophole, but it's not going to be through the flood insurance. It's going to be through the homeowners insurance, right? But yeah, the problem that we're seeing right now in New Jersey is because of the elevated events and how often people have been needing to use flood insurance. I mean, there's really no difference price wise between FEMA and these private institutions at this point, right? Especially in the Burlington area, right? In Burlington County, that's the big thorn in the side right now. I mean, you could purchase a home at $150,000. You're required to have flood insurance, and the premium is $4,000 a year. I mean, for a lot of people, that's a deal killer, because there's DTI that goes into the back end with the mortgage, right? You have PMI at that point. You've got homeowners insurance at that point, and now we're just tacking on an extra monthly expense essentially in flood insurance. Flood insurance at its core is just for bodies of water that have the ability to flood, right? You've the Delaware, those small rivers and creeks that kind of run through all these different towns, right? And it's just going to cover the first floor of the home, essentially, right? A lot of basement contents aren't going to be covered if there's a flood, unless you specifically add it on. But then we're talking, that's a higher premium, right? So it's tough, right? It's a hard conversation to have right now for a lot of buyers in New Jersey, because it's expensive. And the other issue is kind of what you mentioned, right? There could be somebody that is buying a house right now where the sellers lived there for 30 plus years, and that seller never had flood insurance because at the time it wasn't in a floodplain. But again, 2 years ago, they did a re-rating of the FEMA map, and now a lot of these homes that weren't in floodplains before are in floodplains now and require flood insurance, right? So the seller could be like, hey, I've never had a policy. I never needed a policy. I wasn't in a flood zone. Well, the buyer's going to say, well, what the heck? They didn't need it. Why do I need it? Well, one, you're in a floodplain now, right? And two, your mortgage company is requiring it. So there's really no way around it.
All right, so I have a quick question, because that exact scenario happened to me. And first off, I said EPA. Yeah, I'm an idiot. It's FEMA. Yeah, I just the couple letter government acronyms were cruising around in my brain. But that happened to me. We had a buyer. She was all pre-approved, ready to go. This was in her budget, the whole nine. And we talked to the seller. We said, do you require flood insurance? And they said, no, we've never paid flood insurance. We've been here for 20 years. And you're right. 2 years ago, they did it. So here's my question for you. Obviously, for this buyer, if she was going to buy the house, she would have had to have that flood insurance. And unfortunately, it did price us out of the home from a monthly budget standpoint. But here's the second question. I'm a homeowner. I own a home. And I've never paid flood insurance, but all of a sudden I'm listening to this and I'm going on the FEMA.gov website and I'm finding one of these titled floodplain maps, and I'm realizing, whoa, I'm now in a floodplain and I have a mortgage. Do I have to start paying flood insurance?
If you look to refinance and you get a new mortgage company, they might require it at that point. If you've been with the mortgage company for the last 15 years, they're not going to require that you just all of a sudden go get a policy, right? It's a lot of the times it goes back to what we always used to say, you're grandfathered in, right? So because you weren't in a floodplain before, the mortgage company underwriting didn't require it. They're not just all of a sudden going to say, hey, you've never had, in the 15 years you've been with us, you've never needed it, but now all of a sudden we're going to make you get it, right? If you look to refinance and you're with a new lender, yeah, they could absolutely at that point require that you get it, but they can't, your mortgage company is not just going to go, hey, hey, you're in a floodplain now, we're going to jack your mortgage up because we're going to add another policy on there. That's not going to happen.
Yeah, it seems like it should happen, but I also really appreciate that it doesn't happen because you're right. That could really put a lot of people out if they just said, hey, every single person in New Jersey, if you got redrawn into a floodplain, game on. Like all of you have to get policies in the next 2 months, or else we're, whatever. So we'll start taking legal action. That would be crazy. So I appreciate the grandfathered in aspect.
Yeah, and this is the craziest thing about flood insurance too, right? Is if you look at the flood map and you say, well, it doesn't look like it even touches my house. It's just on my property. It doesn't matter. It doesn't matter if it's just on the property or if it's touching the house or not. As long as your property's in the floodplain, your mortgage company is going to require that you have a policy in place, which also makes it tough because then it's like, hey, even if I did get this, once in every 100-year flood that comes through, it's not even going to reach my house unless it's the end of the world. I understand that completely. But again, there's no way around it because your mortgage company is going to require that you have it because they're seeing that you're zoned in a flood zone. So it's tough. It's definitely tough.
Yeah, either pay off your mortgage or pay the flood insurance.
Yep, exactly.
All right, so let's just basically ask like kind of the last one or two here. All right, I own a home and one of these acts of God happens, something happens. How do I file a claim? Do I contact the police? Do I contact the insurance broker that I did the policy with? Do I contact the customer service rep who's on my paperwork? Like, just in your best, again, just walk me through this like elementary school style. I woke up, big issue. I got water in the basement. It was from, again, a sudden and unexpected issue. What should I do first?
Sure. The first thing you should do is call the agent that you worked with that helped get the policy in place and make sure that what you're calling to file a claim for is covered by the policy, right? Because sometimes there might be something that you're trying to file a claim for that might not even be a coverage, right? So you want to make sure that before you call and start the process of getting a rep out there and starting the claims process with your carrier, just make sure it's covered, right? Just call in, hey, this is what's going on. What do you think in your, years of experience is the best case scenario for me, right? Is this going to be covered if I call to try to file a claim? Is it not, right? That's the first step. The second step is after that, your agent should advise what the claims phone number is for your carrier. You call them directly and they'll get you set up right there. Like, okay, hey, we'll open the claim. We'll send an adjuster out. We'll get this process started. And then from there, the carrier just kind of takes over, right? At that point, the agent, myself, and the brokerage, right, Premier Home and Auto, we're kind of out of the loop. We might get a notice saying that, in the worst case event, if a claim's denied, we'll know that it's denied. They'll reach out to us and let us know. But outside of that, the carrier just kind of takes over from there and they get you all set.
All right. So here's kind of the last question. As I'm a buyer, right, I'm going to be looking to purchase a home in the next year, and I'm doing all this stuff to get myself financially ready to, get pre-approved for the mortgage. So I'm working on my credit to make sure that's good. I'm putting money in saving. I'm making sure I'm paying down debt. I'm making sure that I don't miss any medical payments. I'm starting my home search with my realtor. All these things are going on. And we always talk about, is there homework I can do? Is there stuff that I can do today that when it's time to actually get insurance, I will be in a better position than if I had did nothing? So from your opinion, what are some basic things that people can do to maybe improve their ability to get a really good coverage, a good deductible, try and set themselves up for success, when they go to apply for that homeowner's insurance? Or does it kind of not really matter and it just depends on the house you get? Or what are some of those things?
Yeah, I mean, obviously, it's always going to come down to a personal thing, right? What is in your best interest and what works best for you, right? Obviously, if somebody's buying $1 million home, they probably don't care much to go through insurance because they have the money to take care of things. If something happens, they'll say, hey, I just want the bare minimum coverage, high deductible. I'm never going to use it anyway. I just need it because the mortgage requires it, right? If it's somebody that's buying their first home, they're kind of strapped for cash, right? They want to make sure that this big investment that they're making is going to work out in the long run. Yeah, you need to talk to the best possible agent, right? And then, yeah, again, I know it's easy to just call Geico, right? They'll get you set up. You'll talk to somebody, they'll get you a quote, but they don't really care, right? They just want to make their buck. They want to make sure that they're doing what they're supposed to be doing. And that's about it, right? Always make sure that you're talking to somebody that walks you through every single coverage on the policy, right? Make sure you know what your policy covers, what's not going to be covered, and obviously talk to your client, talk to your agent about what deductible works best, right? Um, Obviously, right now, the lower the deductible, obviously the better, especially if you don't really have a nest egg where you can just pay out of pocket if something happens. But at the same time, right, you don't really want to be filing a claim for something that's a $2,500 loss, right? You're going to owe 1,000, and then the company is going to give you $1,500, right? That's not something that I really advise clients that they should be filing a claim for, right? Just pay the $2,500. And there's some reasons for that. The first one is it's hard to find coverage for somebody that's got claims on their record and they stick with you for 5 to 7 years, right? Your premium's just going to go up at renewal after that, and it's going to go up more than usual because it always goes up every year. Common misconception. It's always going to increase year after year. But it's going to go up more than usual. It might go up $1,000, $1,500, right? And in the worst case scenario, they could drop you. Hey, you filed a claim with us, but at this time, right, we see you as a bigger risk on our book. We don't want to cover you anymore. And then when you run the numbers again, you're paying even more than you already were because you have the claim on your file, and it might make it hard for you to get coverage. So again, right, that's why you need to have a good agent, not just somebody that wants to get you on the books because they want to get paid, right? Make sure that they're actually listening to you and what your concerns are for your home, right? Maybe a $2,500 deductible is going to be the best option for you because it's going to give you a little bit cheaper policy. So that means you don't have issues with your mortgage payment. But, you might not be able to file the little claims, which again is good, right? Some agents might say, hey, pay the extra $200 a year for the premium and have $1,000 deductible, right? This is the best option for you. The caveat to that is some mortgage companies might be a pain, saying, we can't have a deductible that's this high. We need it to be less than that, which will play a factor. But again, that's why it's good to work with a brokerage, because we're going to reach out to the mortgage company and work with them directly, right? Like we're going to take over that process and say, hey, if you agree to this policy, I'll handle all the paperwork. I'll make sure that the mortgage company has everything they need to know, that they have everything they need to finalize the numbers for you. And we'll make sure that this policy meets all lending requirements, right? So just make sure that you're going through somebody that actually has these conversations with you, not just somebody on the other end that's like, hey, here's a policy for $800 a year, no coverage, high deductible, but it's great. Look at that premium for the year. You're not paying anything out of pocket. Just work with somebody that's good. That's all I can recommend.
All right, Eric. Well, we're coming to the end of our time here. So, A, I want to say thank you for coming on and doing this with us. B, go Birds, go Steelers. I hope for both our PA teams tonight, we advance to our next round. And at the end of the day, for everybody, look, mortgages, if you could potentially refinance here and there, maybe every handful of years if you had to for some reason. Title, you're not really doing over and over again. But insurance, this is something that pretty much renews every year. Insurance is one of those things that even if you're going to be in your home for 20 years and you're never going to, leave in that 20 years, you should still probably chat with someone like Eric or Pete on his team. Like you should chat with them pretty much annually about your policy and to rerun the policy to see if it's going to still be a good fit for you, because that can change year over year. Legislation changes, companies change, the flood maps change, all sorts of this stuff. So this is one of those things that, and even if you're in your home right now, reach out to me, reach out to Eric. We'll make sure I bring all of his information here under the YouTube video. But it's something that could save you a lot of money. You could be way overpaying for a policy that you did get through your auto provider that just happens to be the policy you have. Probably has good coverage. You might just be overpaying by a few $100s every year. So that's what I'm going to leave you with, is just rerun this stuff annually. This is one of those things that as a good homeowner, you should be rerunning your homeowner's insurance every single year around the same time of year. And they may say, stay with it. This is the best policy for you. They may not. So anyway, everybody, thank you again. Appreciate you coming on, Eric, and we'll talk to you next time.